Welcome back, everyone, to Lem's Cryptoverse. Today, I want to give a short commentary on what's going on with the market. As you recall, I had done some previous videos on what I'm seeing as some underlying strength. On number one, sentiment turned positive. And what I mean by that is that it's a contrarian indicator that there's been too many bears. So that's got a contrarian indicator, and that gave a positive number. And I did a video on this called sentiment indicator. I said we were about 7, which is a moderately bullish number. So that's good. Number two, I see a lot of risk on in terms of crypto. And again, if you look at the fear greed index, there was too much fear. And number three, there was a lot of positive numbers and data points in terms of my daily indicator, which I also did a video on. And that indicator has to do with correlations. When correlations are positive, meaning that they're showing that risk on assets are doing well, that means there's a higher probability for the market to go up. I'll give you an example. If meme stocks are doing well, even when the market is down, that's a positive indicator. That means the market wants to go up. I'll give you another example. If gold prices, and we saw gold actually hit $1,900 today. If gold prices go up, again, that's showing that gold prices are sniffing out lower rates. And today, what we saw was gold hitting 1900. Bitcoin surprised me, went from 17,000 to 18,000 and then hit 19,000. Unbelievable. So crypto too was sniffing out lower rates. And then if you look at the yield curve for weeks, months, the yield curve had been inverting, meaning long-term rates. And I'm talking about the 10-year rate, the 30-year rate. Those rates were rising less than short-term rates. In fact, those rates started declining. And so I talked to you about in another video that if you not only look at the 2-10 spread, but you look at the 30-10 spread or the 30 versus the 3-month spread, all those spreads, meaning the yield curve, was showing that the yield curve was rapidly inverting. As a matter of fact, long-term treasury bonds did so well today that I actually think for the first time in many months, maybe a year, long-term treasuries may actually be overbought. That's how well they did. The 30-year treasury, for example, was up over 2 points today. And if you look at the stock market, today the Dow was up 0.6%, S&P was up 0.3%, the NASDAQ was up 0.6%, but the Russell 2000 was up 1.7%. So we're seeing a lot of broad strength. And it's not just broad because the number of advancing stocks and declining stocks was strong, but that was true. That was the case. And it's not just broad because small caps, the S&P small cap index was strong and the Russell 2000 was strong. It's not just strong because of that. We're also seeing good fundamentals in terms of volume. The market's going up with high volume. So that means that there's a lot of money flow going into the stock market. But just to be clear, and I said this before, this is a bear market rally. We're not at the bottom yet. And you could see that with the way the market's acting. I just said it's good that there's volume. We're getting higher prices and higher volumes. But this is also indicative of a short covering rally. So that's it for today. I just want to say everything looks good. We've got the green light for the market to keep going up the next few days. I'm not sure if we're going to make it past 4,100 on S&P or past February because seasonally, that's where the market weakens. And also, if you look at the trend lines, there's a lot of resistance at 4,100 on the S&P. So good luck. Enjoy the rally. But keep your finger on the exit button. Bye-bye.